Hello, everybody. Here we go for another one of these Substack videos. No trade calls, no recommendations, or responsible loan stuff. We're here for educational purposes only. 17th of June, 2026. Let's see. Let's go through the SPX framework once again. So here I'm recording this. We're still in the overnight session. Yesterday we have SPX closing at 7533. In the overnight session, we're seeing a little bit of heavy flows driven by NASDAQ with the ES trading at 74.95. Okay, so clearly it could be a very interesting day, but I just wanted to put things into context again and highlight what I'm looking at and the way I'm focusing on this, right? So as we said, as always, it's important to not get emotional about it, not think you know more than the market does, and just focus on the levels. So what we'd been discussing in this framework was that the real pivotal level, the big pivotal level, remained that pretty much that 7,400 level, 7,404. And as long as the market chopped around here, this was sideways to bullish, and you could see that the market was kind of keeping up these higher lows and had broken up. So this would mean, you know, your only base case expectation is, as long as this holds, is that this pattern continues to grind higher, and it's going to continue to grind higher back into those higher targets, with the next target on SPX being 79.62. Now, we've been highlighting the fact that the market, it's going to be hard for the market to stay bid if the whole AI, the whole semi trade starts to roll over. But again, that's a topic for a different venue. So here, right now, what to watch for today is, if you're thinking about it logically, right, is basically you had the market trying to rotate off this 7400. If we lose that 7400, well, then just in a classical situation is when you see these kind of rotations break, you tend to go back into the scene of the crime, which is back into that low. Now, also, if you think about it, not technically, but just, you know, what's going on? Well, basically, this low was when Trump said, okay, ceasefire, we're going to get a deal, yada, 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 and the market got saved, stick saved. But if we've got a situation where conflict is heating up again, more missiles are flying, more problems, and on top of that, you also have, you know, semis, South Korea trading super heavy, well, it makes even more sense that we should go right back into the scene of the crime, because, you know, conflict isn't solved, crude prices are going higher again, there's no deal, they're going to continue hostility. So it just makes sense that it would be right back into this level, pretty much 7,200. And if you add to that the fact that you've got all those levered plays in South Korea, AI names getting shwabammed, you know, then it would make sense that we trade even lower. However, continuing to focus on the technicals here is just market tried to break out. It looks like we're going to try and test that 7404. Unless we get a magical headline just ahead of the cash open to save the deal, you never know. But even if you get that, as long as we don't trade back below that 7404 and bids continue to come in trying to support here, whether it's on tweets or headlines or whatever, as long as this remains supported, your base case assumption is that rotation higher is still in play, and it could be very explosive to fill the cash gap we're going to get today. If you see no bids coming back in at the 7404, if you see tweets trying to hold the market and it can't hold, and in any case we close below, then your base case assumption is that we just have to go right back into the scene of the crime, and that's that 7,200 level. Now, what's interesting with that level is you're going to have the added support of the 100 DMA coming in there. So that's your first target on a break below the 7404. If that doesn't hold, then what you would be expecting is to see this come all the way back into the next key reference point, which is all this series of higher lows, of all-time highs, and the 200 DMA at the 7,000. As we've discussed before, even a rotation back into the 7,000 and a hold of the 200 DMA doesn't break the structural integrity of the bull run, right? Oh, now, should we get a situation where we trade below the 7,000, well, basically then that opens up a lot of poor structure repair to the downside. We'd be looking for that 6600 coming, that gap fill, and potentially a move back here. Now, clearly, especially if this breakdown coincides with more hostilities, with crude trading higher, with the market having to price in hikes with the AI trading, trade unwinding even more, chips unwinding even more, then of course that gives you more reason to expect that move to materialize. But right now, I would take things one step at a time. By the way, a move back into those lows is simply a 5% correction, so that would be statistically normal. If you see a move back into the 200 DMA, that's not even a 10%, and even if we correct all the way back down, it's not even a 20% correction. So it's not like it wouldn't be a crazy, absolute nuts move. Now, again, focus on the levels. Right now, for today, the key reference points are 7404 bull bear line, interim support 7200s, and going into the next week, clearly that 7000 remains key. Okay, hope that was useful. Wishing everyone an awesome one. Talk to you guys soon. Take care. Bye bye.